Welcome back, traders. Let's follow up on the two trades that we've been watching. That's the Euro US dollar and the Euro Canadian. If we hop on over to the Euro US dollar, we can see that we've had some very interesting movements here. First, let me actually bring up the news that we were watching out for. If we go and have a look at crude oil inventories, this is quite a big one. The US dollar had a very happy news event coming out of this. Not only was it better than expected, but it was significantly better than expected. If you do click on this, you can see what crude oil inventories is all about. But the thing is that, long story short, is that crude oil has a lot of value to it because most of the world is still using crude oil in order to create fuel. And, you know, fuel obviously drives all the vehicles, it moves everything around, it's needed in importing and exporting. And the United States stockpiles a lot of crude oil, and the US dollar is tied quite heavily to the value of crude oil. So when they have a lot more than what was expected, it's kind of like when you take your clothes out of the washing machine and you think, oh, I think I had a 20 Rand note in there. And it turns out that that 20 Rand note is actually a pile of 50s or a pile of 100s. And you know, you're richer than you expected. So this is obviously a very positive sign for the US dollar, and we saw that it did carry on the bearish momentum. We'll have a look at that soon. The core durable goods, the one that we were watching out for and the one that we learned a little bit more about on the newsletter on Monday, and we spoke about a bit yesterday as well. This came out worse than expected, but it wasn't significantly worse. It's not like you know, this came out at a full negative 1% or anything like that. Yes, it's a bad thing, but it's not massively different. It's like if that 20 Rand note turned out to be a 10 Rand note and a 5 Rand coin. You know, you're a little bit poorer than you expected, but you're in the same kind of ballpark. Certainly not as nice as the news came out for the crude oil inventories. So overall, the US dollar had some very nice surprises coming out there. Then we did have some speeches, but they weren't by anybody who's really high up, as in one of the big decision makers or policy makers. So that didn't really send the market going wild too much. On the shorter term, yes, but it kind of just gets absorbed into the 4-hour chart. And then we have a look at what has happened recently. We haven't had any major news events. So let's have a look at the chart. We can see here these lines that we've drawn in that you should be quite familiar with by now. And we were showing you that we had a low and a higher low, a high and a higher high, which is telling us that the market is bullish. But then we spotted that the market had just come down below this low. So the next low would have to be lower. And we're saying that this could open up what's called like a triangle type shape, where if you have a low here and then a lower one, we can see that the market would be trending down, but by following the highs, it's still going up. So it sort of opens it up and we don't have a clear sense of direction. But now, with all of this movement that we've had since then, we could say that this is a high, or this is a low. And I say or because remember, for something to be a confirmed high or a confirmed low, it needs to be a group of 5 candles. And one of the restrictions is that it cannot share candles with another high or a low. So if we consider this as a high, this being the turning point, and then the 2 to the right are lower, the 2 to the left are lower, that cluster of 5 would make this a high. But if we call this a low, you'll see that we have shared candlesticks. So we would have to decide if this is considered a high or a low. And this is where there isn't a set exact rule. So what I like to do is I'd see if we've had any more information, and yes, we have. We can see here that we've got a low position forming here. So we'll leave that as a high, and then we'll consider this as the next low. And now we have a high with a lower high, a low with a lower low. So it's a confirmation that we're moving back into the bearish position. But now if you look at this big movement that's happened here, it's obviously too late to hop into this trade right now, unless you were watching that news event and you did manage to pick up a short position off of that, which I hope quite a few of you were watching that and managed to pull that off. And now we're starting to enter into a trading range over here. And we can see that we do have some information from late last year. We had a turning point at about this line. So let's go ahead and put that line in and see if we can get some kind of confirmation. Now I'm going to change this line's color temporarily. It is the last horizontal line. I'm just going to temporarily change this to, doesn't really matter as long as it's different. Here I'll choose a green. And now this will let us look into history and see if this line has been used before. This is where we had it. It was November last year. We didn't. That's not really a turnover. It does look like it was testing a little bit, but certainly not strong enough for us to think much. Let's have a look at the weekly. This is not really close enough at this point. Here it just shot right through. If we go back further into history, now it feels like we're starting to look way too far away. I mean, we're back in, this is 2001 on the left side of your screen. So this would be too far. So no, I don't believe that that line is really significant right now. I'll leave it as a green, just so we can watch it and see if something comes off. It might give us some indication as to whether or not that is going to be an important level. I don't believe it is though. So we'd probably just ignore that completely. Actually, you know what the best thing to do in this point is you actually take a line like this that's a different color and you put it off here, and I'll show you why. This candlestick here is a bullish pin bar. Now remember, you can't trade a pin bar on its own. You need some kind of confirmation. So by drawing in the line at the base of the pin bar, we're now going to have a quick look into history again, and we're going to see if that line was used and if this is an important level that we just moved it down to. And I'm afraid it looks like we're going to have the same thing. This is one of the trickier times when the market is not trading in a range that it usually does. It means that we have to go very far back to look for information. Like over here, we're already in 2003. That's starting to get a little far away from my like. You know, if you keep looking back, eventually you will find something. But if you do that sort of thing, it starts becoming less and less reliable. Personally, on a 4-hour chart, I prefer to find something in the last 2 or 3 years. If I'm trading a weekly or monthly, then yes, I'll be more than willing to go further back than that. So this green line is a no-go. I'm going to get rid of that, and let's zoom in a tiny bit again. So what I'm going to do here now is I'm going to have a look at our other trading strategy and see what's going on. With this one, we've highlighted that we are looking at bearish positions. The overall news coming out of the US dollar has been very strong, which would confirm the bearish position. So here we're looking back at our good old classic crossover, which did actually pick up a sell position from up here already. So for those of you who are trading this strategy that we teach in our free online course, you should have managed to pick up a few sells over there. It did happen before it was an oversold, so that would have been a clear entry. So what we're waiting for now is for this to come back up and then start going short again to give us a new entry. If you're still in this trade, the only reason I would consider getting out of it now would be the fact that it is leaving oversold. This is not a strong enough indicator for us to actually place a trade in a buy position, but it does mean that you should certainly look at maybe splitting the trade, cashing out half of your profit and staying in for the rest, or something along those lines. But while the market is underneath the larger moving average, we've got the smallers under the larger as well. MACD is negative, stochastic is on the low end, and if we're following the highs and lows, it looks bearish. The technical analysis is pointing in the direction that the market should continue going down, and the news as well has been showing us that the US dollar is actually strengthening. There has been some fantastic news coming out of them, so we don't really have a position to open right now. There's no exact entry point, so we're waiting for one. That could be a news event, could be a candle. It could even be if the market shoots up enough, which puts us into an overbought position on stochastic and then comes and leaves back into a regular trading area, then we could look at a short position on that. But as things stand, I would not go for a long position unless some major news came out which changes our mind on that.